Yeah, I'm losing my
Let's talk about
edge.
markets here today. A couple of days left until the election gets underway. We're hoping that it's just one night of election results. We're planning for anything, though. And with that being said, I want to talk about trading before and after the election. It's Thursday afternoon here. The election goes off typically on Tuesday nights. That's what they tell me. And on average, Pete, we've seen this type of performance out of the stock market. We looked at this a little bit yesterday, crunched some numbers from the 2004 election. There was election in 2004, right?
Yeah.
4, 8, 12, 16.
Guys, there was your 30-second snapshot of the dividends of a University of Michigan math degree.
Studied mathematics, yeah.
Wow. Well done.
Yep. And I needed my hands to count
You're going to need a nap this afternoon.
So in those 4 elections, Pete, we've seen on average a rally beforehand, a sell-off the day after, and then a continuation of that sell-off. And it's been defined by essentially just greater volatility when President Obama was elected, those 2 occurrences here. And then 04 was the second term of Bush. Is that right?
Mm-hmm.
Okay. And so then
I got to think, but yeah. Wow.
I think so.
04? Yeah. Second
This
term
is
Bush.
good TV right now.
Yeah, I know.
Who was elected?
Let's watch paint dry.
So we have 2 Republican data points and we've got 2 Democratic data points. And this is what we saw when digging in further. And it's just honestly and it's funny because I think that this trend will carry through, especially for the Republican candidate if he were to win this year here in 2020, which is to say just relatively more calmness in the stock market when a Republican has been voted in. I think there tends to be this idea, the volatility that we've seen in recent years, the shakeup here is just like knee-jerk reactions to, liberal Democrat coming in and really shifting stuff around, especially in 08, going from, George Bush to someone who's probably been considered one of our most liberal presidents, Barack Obama, a big this is going to mean X, Y, and Z, and we need to sell off these stocks now. And what we've seen, I didn't put the stats in here, but you tend to see this knee-jerk reaction just get washed away afterwards. And you see that before the election and then also after it. But yeah, just greater volatility, which honestly just to me means more opportunity, right? Like, wouldn't you say that those
Agreed.
2 things are synonymous here? Like I almost, the trader in me, regardless of your ideals, the trader in me wants Biden to be elected for the potential shakeup here that I could just get on the other side of, right? Like if Trump gets elected, it's like, okay, it's 4 more years of what we've seen. It'll be interesting because it'll be a surprise relative to polling and the odds here. So maybe we see a shakeup because of that. But the changing of the guard from Republican to Democrat would give us probably, I don't know if it'd be up or down, but big moves to tentatively get on the other side of.
Yeah, absolutely. And that's what we want. And you're right. You hit on it. You're spot on, Frank. That's what we want. We want to see the opportunity for more back and forth. And, I think that's what we're looking for. Trying to back and fill the rest of it is kind of, your curve fitting and exercise. I think we take the numbers as what they are and look for the, as a guidepost to, not trying to guess the outcome. In other words, I'm going to look at the polls, guess the outcome, and then expect more from the trade. No, I'm going to react to the outcome and then take advantage of the context around the trade. And just
totally agree.
Make it easier on yourselves, guys. Take advantage of what you know, not what you don't.
Exactly. Yeah. And this will be the theme because we're going to roll through here in a second treasuries, currencies, and metals, and put these numbers around those asset classes as well. But the theme that you'll see is here are the broad statistics for how markets perform around elections. And I by no means am I going to use them, Pete, to, like you said, try to guess the outcome here. Like, oh man, Biden, it looks like he's going to win, but I really think that Trump is going to win. And because of that, I'm going to buy and hold through the election here because of these statistics. No, what this is really telling me is I can expect before and after the election about 3% in movement on either side. And when the market gets to 3% or a little bit beyond that, upside or downside, that's where I'm getting in. That's it, it's really setting the expectations for what could happen this next week, and then just letting the trade come to you and getting on the other side of it. Interesting here.
See, I do you find it interesting?
I find this interesting because if
Okay.
anything, weirdly enough, I think that interest rates are actually the thing that the newly elected president kind of has the most influence, the most sway over when it comes to, and we saw it with Trump early in his tenure as president. He talked immediately to, I think the Fed needs to do this. And we saw Treasury markets move immediately after that. And this is kind of what I more expected. And I know, Pete, that you don't want to give any weight to this at all, but it's intriguing to me that the more dovish leaning Democrats were met with buying in treasuries and thus falling in yields, as opposed to the more hawkish leaning Republicans who were met with selling in treasury prices and thus increasing in interest rates. These are some pretty we're talking about
movement in rates. It's a big percentage. I agree.
But you don't want to give anything. Like this is the only trade that if you really wanted to make I think Biden is going to win, and so I'm trading this market, or I think Trump is going to win, so I'm trading this market. This is the only one that I would actually probably go to and say, if I think Biden is going to win, then I would look at buying this market and just trying to sell right after those results, because I don't think it's any long-term change, Pete. I'll agree with you on that. But I do think that depending on who wins, we will see this historical trend play out a little bit. Now you're going to tell me no, though.
No, I think we all have a certain amount of the numbers don't lie, Frank, and you make a good case. I think for me, around this, you only have a certain amount of bandwidth of things you can watch, and we could walk through that, and we've done a little bit of talking about the whole mechanics of how much does a chief executive president affect Fed policy and thus rates. We've had that discussion, the long-term downstream implications of anything. I don't think you can argue with the numbers here, and I'm a little bit surprised to see the amount of, on the Republican side, the amount of down move. It is. You would think the thought is that there's going to be more spending out of a Democrat. Why wouldn't rates go higher, and conversely, i.e. bonds go lower? This plays just the other way around. I just don't see, for me, that this, and I was talking with Tom a little bit earlier about this, I don't see my focus when opportunity presents itself around treasuries. I think there'll be lots to do in equities. There'll be tons to do in FX. Gold is interesting to me. Crude is a second-tier mover.
Wow.
It's really interesting to me.
That's crazy.
I don't think treasuries, unless they serve me up something huge in terms of movement, are that. And you know what? Right now, and you pointed out today, we gave back 3 days of grinding, painful higher rally in the bonds, and we're right back to 173. So I don't know what I need. Do I need a trade well below 170 or above 176?
Okay.
I mean, so
I see that. I see where you're coming from in that. Like, I don't think this is a trade where we're going to get just a flooding of volatility after the election.
Right.
I think more that this is, if you wanted to ride a trend, this is the one that I would ride with the trend through the election. I agree with you. This isn't one where I think we're going to get 2 points higher or lower in bonds afterwards, but it is one that if I'm feeling like the Democrat is going to win, then I'm going to look at a long position going into this, and vice versa for the Republican. I agree. It's not going to be a first tier mover, but it's the one with the most distinct trend here historically.
Yeah, so I would guess if you wanted to be a contrarian and fade the polls, you'd be selling call spreads and bonds right here. We're right in the middle of the range. Yeah, I think this could, as a hedge against what the polls say, and I don't take anything for certain, but the likelihood, and we looked at predicted the likelihood that there's going to be a Democrat maybe your hedge is that you have some bond call. I don't mind being short bonds. I feel again, the best we could do, the best I could muster is buying put spreads in ZN. Hey,
Yeah.
it's better than nothing, but it certainly was about the smallest way we could. I mean, I
Sure.
wasn't even interested in naked calls.
So
So let's take a look at the
look at
euros. Yeah.
currency performance. You see that the dollar. This is euro performance, so it's inverse for the dollar. You saw a little bit of selling in the dollar, a little bit of bid tone in euros going into it, and then afterwards, a big rise in USD and fall off in
Yeah.
that euro market. It almost kind of smacks of volatility, like a fear trade, right? Where it's like, oh, we don't know what's going to happen with this presidential election. Let's get rid of our dollars, people taking some exposure off the table. And then afterwards, almost this like release, like, oh, it's not that big of a deal. And we see the dollar rise back up to actually higher levels, and the euro underperform. And here, I mean, this is probably not so interesting one way or the other, right? Like, this is just, I would kind of take the broad trend of like little to no action beforehand, and actually almost like fear coming out of an earnings trade. After earnings are announced, you see this release in euros and bid in dollars after recent elections.
Yeah, I agree with you. I think we're seeing that rally in the dollar take place right now. We talked about selling SFX here. I think the dollar is going to be a prime mover. It's interesting that here net both are unchanged the day after. I wouldn't have thought that, but I think in terms of the 2% for the Democratic win is the week after is the largest net move out of anything we ran through today, right?
But I'm glad that you bring this up, because this tells me that, these zeros to a lot of people might mean like, oh, there's nothing to do. No, but this tells me that the night of the election, we're going to see big moves in this euro as numbers come in for both candidates. It tells me that historically I can kind of rely on a context of it meaning nothing. So like if we see some numbers come out of Florida, for example, and Biden is doing better than we thought, or Trump is doing better than we thought, and we see, a 50-point swing in the euro, I think that's a cool trade. Now, wrapping things up quickly, I didn't intend on you thinking this would be that interesting, but almost a similar trade here in gold, where you're seeing like a rise going into it, like a little bit of fear coming into gold, and then a big release the day after and the week after. And once again, another trend, there's a couple of cool trends in all of this data, but another trend is just recently the Democratic candidate has just been met with more volatility. Like no matter what the trend was, higher before, lower after, vice versa, no trend before and then lower after, whatever it is, just more big moves here for this Democrat being elected. But either way, you're seeing a little bit of either no activity or on average a little rise in gold beforehand, and then just a big release afterwards.
Yeah. I think this is where it's going to really play out to be very interesting, is for me, I go through this and I think, okay, we have percentages as to the likelihood of the outcome. We know that those don't necessarily, there's still uncertainty wrapped around it. Where can I find the greatest piece I may build strategies around a leaning, but what do I always want to have something on that if my strategy, my ideas don't unfold through a number of products, I have something that backstops that a little bit and slows that. And I think this exercise we've run through here has really, for me, it's really kind of turned the gears in terms of thinking, okay, what do I want to put against my core strategies rolling into this?
Yeah, no, I agree. That's a great note to close on here, Pete, is that these are 4 distinct asset classes that have little to no correlation and have their own distinct vibes and trends before and after the election. And so I would try to play as many as you can to diversify, like you're speaking to, and create, no matter what the trend is, and no matter what you think going into this and after the election, just make sure your strategy is consistent, your mechanics are consistent, and you take these numbers more as expectation builders than something that has to happen.